Wall Street still moves billions every second, but no one's really in control. Not the traders, not the banks, just the machines. Lines of code now decide who profits and who disappears. They read news, sense fear, and move money faster than thought. Let's call her Evelyn. She isn't a trader, just another professional with an index fund ticking quietly in the background. Every flicker on that screen is a whisper from those same machines. You see, this isn't the future of finance, it's the system we already live inside. 40 years ago, the rhythm of Wall Street was human. The roar of voices, paper tickets flying through the air, phones slammed in triumph or defeat. Today, it's almost silent. The shouting gave way to the hum of machines. In the late 1980s, computers began handling orders too complex or too fast for people. By the 2000s, high-frequency trading, algorithms firing thousands of orders per second, had become the norm. Traders eye inflation data. Evelyn doesn't react. Her phone pings with a portfolio update. The same technology that once gave traders a split-second edge now manages her retirement plan while she rides to work. Here, speed became power. Whoever reached the exchange first won. Banks spent billions on fiber optic cables, microwave towers, and data centers built a few meters from exchange servers, all to shave off fractions of a millisecond. At that speed, geography itself becomes currency. Traders stopped competing with each other and started competing with latency, the delay between decision and execution. Over time, the race for speed turned into an arms race of machines. If you pause on that reflection for a second, you realize something. What happens in those silent server rooms already touches every account balance on her screen, and yours. Beneath the glass towers and the scrolling tickers, the real market lives here, inside climate-controlled rooms designed for one thing: to move faster than we can think. You see, the names most people never hear, market makers and quant firms, now execute more trades in a day than some countries do in a month. They don't watch the market, they model it. And then they let those models act. A typical system ingests torrents of information, price changes, order book pressure, breaking headlines, even patterns in how other machines behave. It doesn't read like we do. It recognizes. It hunts for a pattern that rhymes with profit, and when it finds one, the decision is made in less than a millisecond. If you think about it, a millisecond is nothing to us. But to these systems, it's an ocean. That's why every cable length, every switch, every line of code is shaved down to the bone. The global market for this machinery, hardware, low-latency networks, predictive software, has grown into the tens of billions. But the part you never see isn't the steel or the silicon, it's the learning. Early programs followed rules. If this, then that. Now, machine learning models write their own playbooks. They simulate millions of market scenarios in minutes, then deploy the best idea across thousands of symbols at once. And if you zoom out for a second, you will see that this isn't just a Wall Street trick. Somewhere across the city, Evelyn's portfolio app refreshes with a tiny, silent adjustment. An automated rebalance triggered by the same logic that steers global trades. She didn't press anything. The system decided for her. Here's the uncomfortable part. The more these models learn, the harder they are to fully explain. That doesn't mean they're wild. It means their reasons are encoded in mathematics too dense for a quick human translation. Yes, we built pattern finders. They started finding behavior, and in the race to be first, no one wants to blink. We used to tell computers what to do. If this, then that. But that's not how money moves anymore. The code that once followed orders now learns them. It scans oceans of data, prices, headlines, even satellite feeds. And when a pattern looks profitable, it acts. No pause, no permission. Somewhere, Evelyn's savings app performs a quiet rebalance. She doesn't notice. Smart allocation handles it. The same logic shifts billions elsewhere. If you look closer, the line between investing and autopilot has vanished. We still picture ourselves deciding. The code just moves faster. Early systems obeyed rules, then speed became power. Now the edge is adaptation, machines reshaping strategy in real time, nudging portfolios, routing orders through labyrinths of venues. Imagine 1,000 models trained on similar data. On calm days, they glide in harmony. On the wrong day, that synchrony can magnify a tremor into a wave. Efficiency, yes, but also dependency. The takeover isn't sudden, it's 1,000 small abdications. A checkbox here, an auto rebalance there. You can see, convenience has a gravity. Risk models now adjust continuously from signals too quick for human eyes. Tiny moves, and constant soon becomes decisive. Modern control isn't a hand on a lever. It's rules that rewrite themselves until the new normal feels natural. Engineers call it reinforcement. Regulators call it governance. The market calls it liquidity. What it really is delegation. Delegation that now reaches banking, credit scoring, and fraud detection. Systems judging before people even look. We haven't lost our jobs to robots. We've lost our timing to intervene, and we couldn't unplug it even if we wanted. Finance, data, and daily life are woven too tightly together. The truth is, we built a machine we don't want to stop. It's smooth, efficient, familiar. We prefer the world where it just works, even if we don't quite see how. Somewhere, Evelyn's balance updates again, 2 decimals shifting by a breath. The system doesn't need her attention, only her permission. Every generation builds machines to do what it cannot. The printing press multiplied words, computer multiplied calculation. On Wall Street, artificial intelligence multiplies speed itself. The market now moves like an organism, sensing, reacting, adjusting, before we even know the pulse has changed. Models watch one another's movements, translating data into decisions with no pause for deliberation. Regulation lives in a slower time zone. Rules take months, updates take seconds. The faster the code, the slower the law feels. Somewhere in that gap, power migrates. What began as a race for efficiency has become an ecology, machines learning from markets that are already mostly machine. The IMF warns of synchronized behavior. Models trained on the same data may move together. Liquidity appears until it doesn't. Stability endures until it snaps. That's the paradox of progress, where we removed friction so completely that we removed resistance too. She doesn't know that in another data center, the same phrase is being parsed by thousands of models, their sentiment meters ticking upward, trades firing microseconds later. The loop closes. Human language fuels machine action. Machine action rewrites human headlines. Money, faster than thought, has become thought itself. The story doesn't end in server halls or trading floors. The same intelligence that moves markets now touches daily life, approving loans, pricing insurance, setting credit limits. The algorithms that steer trillions also nudge our smallest choices: what we buy, how we save, when we spend. We still call it finance, but it's beginning to look like infrastructure, a current running through everything we do. Control isn't always taken. Sometimes it's given. We trade oversight for ease, transparency for speed. And maybe that's why the system keeps running so smoothly. It mirrors our preferences perfectly. The machines that trade billions already guide the wallets in our pockets. Somewhere between those two scales lies the next question, the one to zoom in next. If the code already moves our money, how long before it quietly starts moving us?